Hello everyone, and welcome to the TradeShark weekly blog. This week, we will examine a few of the premium technical indicators found within the TradeShark software. Many of these technical indicators are widely known and used by traders all over the world. However, what makes the technical indicators found within TradeShark so unique is that the indicator calculations use predictive data generated through TradeShark's patented technology. This process greatly reduces the lagging nature of these tools, essentially turning lagging reactive indicators into predictive leading indicators. This week, we will take a look at Bollinger Bands, average true range, as well as the Aroon Oscillator. This group of indicators is ideal for gauging market volatility as well as confirming market trends. When used together with TradeShark's proprietary trend forecasts, traders have the edge they need to be consistently profitable in the markets. Let's start by taking a look at Bollinger Bands, a unique indicator that gauges market volatility. Based on the concepts of standard deviation, Bollinger Bands allow traders to identify a range for where prices are likely to trade. As seen on this chart, Bollinger Bands consist of three lines: a moving average, designated by the gray line, along with a upper and lower band in yellow. Traders can use these ranges to better prepare for market volatility, which is extremely important for setting stops and identifying good risk-reward trade ideas. Before using Bollinger Bands, there are a few things traders should keep in mind. The first is that when the market trades above the midline average, prices are considered bullish. However, when prices exceed past the upper or lower bands, prices can be thought of as overextended, at least in the very short term. Notice how at the beginning of this chart, prices remain bullish, but when they extend beyond the upper band, have a tendency to consolidate. Additionally, you'll want to observe how the bands spread apart and also pinch together. One of the great things about Bollinger Bands is how quickly they change to demonstrate the current market conditions. In this chart example, we can see the bands pinching closer and closer together. This tight range signals to traders that the market is becoming congested, which often results in a breakout in either direction. Traders using TradeShark's proprietary trend forecasts along with Bollinger Bands would be well aware of this tight range, as well as the short-term weakness forecasted from the Neural Index. By combining highly accurate predictive indicators from TradeShark, traders can consistently position themselves to protect their market gains as well as capitalize when market trends reverse. The next premium technical indicator for this week's review is the average true range, or ATR. ATR is an extremely popular indicator amongst traders, as it summarizes market volatility quite simply. For example, you will notice on this chart for Caterpillar, I have added the price data, the TradeShark Neural Index, as well as the average true range at the very bottom. The ATR will provide a numerical value, or true range, based on recent market prices. So it is important to understand that the indicator's output is unique to whatever asset or individual stock you may be trading. Additionally, it is an absolute value, so the number will always be positive. Notice how at the beginning of the chart, the ATR is quite low, and prices remain in a tight range, with small moves each day. However, as the trend develops and the trading range expands, the ATR, or true range, begins to increase, moving from values around $1.30 up to a true range of about $1.80. This is important because it allows traders to prepare for expanding trading ranges, which can help traders make better decisions as a market trend develops. Traders can use ATR values to set rigid stop loss conditions, such as setting a stop loss by a certain multiple of the current ATR value. This will ensure that positions are less likely to be stopped out on normal volatility after a market range expansion. By adding Bollinger Bands to this chart, we can get a more visual representation of these indicators and how they can help traders track volatility. Notice how the ATR peaks and then moves lower. As the true range decreases, the Bollinger Bands begin to squeeze together. Just like in the last example, traders who use these tools along with TradeShark's Neural Index have a huge advantage in anticipating trend changes early. This protects unrealized gains and allows traders to capitalize from major trend reversals. Finally, the Aroon Oscillator is an excellent tool to confirm market direction and trend strength. If I go back to this previous chart example, I can quickly add the Aroon Oscillator with a simple drag and drop from the indicator tray. This indicator is extremely simple and effective. When the indicator is above the zero line, it indicates and confirms an uptrend. Conversely, when the indicator is below the zero line, it confirms a downtrend. Also, traders can use the distance away from the zero line to gauge the strength of a current market trend. For example, notice how the indicator becomes bullish at the start of this uptrend, but then remains at a very high relative value, suggesting a very strong uptrend is in place. The Aroon Oscillator is an ideal tool to use in combination with the TradeShark technology, as it can provide strong confirmation of a recent trend prediction. Additionally, the Aroon Oscillator will help traders choose between multiple trading opportunities, allowing them to focus on the strongest trade. I hope you have enjoyed this week's edition of the TradeShark blog. For more information on TradeShark's predictive indicators and patented technology, be sure to visit www.tradeshark.com.